Welcome to the Pirls Stock Market Commentary video for October 9th, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.37 was virtually unchanged from 1.36 last week, remaining within bullish territory. The total count of securities in bullish or bearish patterns increased 2% to 3,115. The count of bearish stocks increased 1%, while the count of stocks in bullish patterns increased 2%. The Pirls P&F Market Breadth Summary Chart shows us a market now 15 consecutive weeks in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 71 points for the ninth decline in 10 weeks, at a positive 309.67 points. It has fallen below the June 2016 top, the July 2014 top, continues below the August 2016 top, the April 2016 top, and continues above the two remaining three tops above plus 100, as well as continuing above all six bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on higher average daily volume. Momentum. Now at a positive 40.70 from a positive 89.22 a week ago, completes a valid Woody's CCI zero line reject long entry pattern begun at Tuesday 9/27 close, when the CCI 20 daily fell below the zero line reject pivot point, completing the trade at Monday 10/10 open. We will report the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 23 weeks ago, while the daily CCI 20 began a Woody's uptrend 12 weeks ago. The CCI 20 weekly has fallen to 88.76 from a positive 95.07 last week, continuing outside the plus or minus 50 range for a new zero line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: oil, oil services and banks, brokers, and some tech on top. Gold and silver and REITs on the bottom. Bullish, semis continues in the top 5. KBW Bank and brokers have left the bottom 5 and entered the top 5. Comp Tech has left the bottom 5. Bearish, oil and oil services continues in the top 5. REITs has entered the bottom 5. Computer hardware has left the top 5. Focus this week from www.shtf goldplan.com, here is one very simple reason for why gold and silver were massacred this week and why prices will soon rise. By Max Slavo. The following are some key points. If you are a precious metals investor, then you may be wondering why the price of gold and silver were absolutely massacred this week. Ask the expert pundits on financial media, and you'll get a swath of explanations for how the strength of the dollar or the improving health of the global economy are to blame. So too, could one make the point that mainstream perspective is such that the economy is improving, which means investors aren't in panic mode and have no reason to hold a safe haven asset. But neither of these arguments could realistically lead to the smackdown we witnessed this week. Well-known gold and silver analyst Andy Hoffman suggests the answer could be much simpler than we have been led to believe. There's no reason. There's not even a propaganda meme of why gold has been smashed. There isn't even such a thing as negative news for precious metals anymore. The fact is, just like back in 2011 in May, when prices collapsed, China is closed for the week. Had you been listening only to the big financial news sites, you would have noticed that they made no mention of this very important fact. With China closed, the markets were open for rampant manipulation, which is exactly what happened, as several $1 billion in leveraged paper assets were dumped on the market. Easy money for the powers that be. Hoffman explains in the latest precious metals update with future money trends, on Monday, China will be back in business, and that means the Shanghai Gold Exchange, which opened last year to counter Western manipulation of precious metals, will likely help rebalance prices to where they were before this week's takedown. This could be one of our last buying opportunities before the long-term bull market trend makes another move like it did in the first part of this year, which saw precious metals rise amid market panic. Thank you for watching this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing the best candidate for the United States presidential race and you true success.